Hi guys, and welcome back to the second video in this course. I hope you had a chance to look at the first one. In the first video I kind of give a brief introduction to trading systems and the trading strategies that we're going to be covering in the rest of this course. So just following on from the first video, we were talking about, or starting to talk about, how do you tell whether a stock is going to go up or down? Now, just to step back from that slightly, there are basically two ways of making money in the stock market, but for now we're only going to focus on the most basic one, which is buy low, sell high. In other words, we want to buy something cheap and we want to sell it expensive, and then we take the profit. That's as simple as that. That's the basic and most fundamental strategy really to make money on the stock market. So when it comes to finding stocks that go up value, most people are looking for this super duper secret. It's like everybody's looking for the mysterious secret, but to be honest with you, there's no real secret. There are more than one secret really. There's more than one thing to understand, to look for, if you want to find stocks that go up in value. So with that in mind, there are two really big misconceptions, and we got to clear that out of the way before we can really move on and sort of get into the nitty-gritty of it. So the first one is this notion that you have to go for these big trades where you make massive profits in one single trade. And from my experience, it really isn't like that. It is once you get really experienced and once you get better at it, it's really much easier to do smaller trades with smaller profits. It's much easier to find those smaller margins, and it's not just finding them, it's also the risk levels are much lower. And I do 100 small trades and know I'm going to make smaller profits. If you're going to risk doing big trades, it's just that there's too much hesitation involved in it. And for now, I think you just really need to get that out of your mind. I want you to think smaller. Don't think small, but just think smaller, if that makes sense. Anyway, so that's the first one. The second one, which is probably the biggest one, is most people think if you want to be successful on the stock market, you have to be right all the time. That really isn't true. The best of the best can only be right 80% of the time, if it is that high. The cold hard truth is that you only need to be right 50% of the time to be successful. And let me explain to you why. When you lose small, but when you win big. And just think about that for a second, and then I'm going to show you a quick example, and it's probably all we're going to have time for in this video. But in this example, I want to illustrate this concept to you, and it's really important that you understand it. And keep in mind that what I said with you only need to be right 50% of the time to actually be successful. So let's see this example. This is a stock. The ticker symbol is CENX if you want to have a look at it. It's a stock that I know quite well, and I've had some good success with it in the past. But the stock kind of caught my eye around mid-March when it hovered around the $2 mark. I deliberately took off a lot of the information that we'll be covering in later parts of this course, but for now, I just want to illustrate this basic principle to you. but it caught my eye around the $2 mark. It was definitely showing some uptrend, and all the indications was there that this stock is definitely heading upwards. And then looking at the same stock a month later, it was around the $6 mark. So it was definitely going up, and that kind of paints a picture of what happened in that 28-day period. So what happened with this particular trade is I bought 1,000 shares at $2 a share, costing me $2,000, and I placed a stop loss at $1.80. Now, if you don't know what a stop loss is, you can just do a search for it online and read up on it. But it basically means that stop loss is my safety net. And as soon as the stock hits the $1.80 mark, the order would automatically be executed. In other words, my stock would automatically sell for $1.80. Okay. And sort of mid-April, as the stock was moving up, I actually moved my stop loss up to 250. That just locked in a little bit of profit, and sort of gave me a bit more flexibility in terms of how much money I could make in this trade. But still, I figured this is definitely going up, and my exit point was much higher than $2.50. Come 28th of April, the stock reaches $4 a share, which is double what I paid. Okay, so that in other words, that doubled my profit, and that's when I sold it for around $4 a share, which gave me a nice $2,000 profit, which is not a huge amount of money, but it's pretty good. It's a small trade, minimal amount of work, and you can do 10-20 of these a month. It's pretty simple stuff. So just back to the point I was trying to make earlier was, let's say the stock did go down and not up. I was hoping it was going to go up, but let's say it didn't. If it went down, as soon as it hit the 180, my stop loss would be executed. In other words, my stock would be sold for $1.80, which means I would get $1,800 back for my initial $2,000 investment, and that means I would have lost $200. Okay. Now, in reality, if I win 2,000, and if I lose only 200. Now think about that for a second, and think back at what I said earlier. You only need to win 50% of the time to actually be successful. So when you do lose, you don't lose much, but when you do win, you win quite a lot. Okay. Now, there's a as we move into some more complicated and some more sophisticated strategies later on, what I could have done is I could have moved my stop loss up to $4, which would have locked in all that profit, and then I had the potential of making even more. But I wasn't really interested in spending too much time on this. Because I'm focused on on making fast money as a momentum trader. You want to get in, get out, do it as quickly as possible. But anyway, there's just so much potential and so much opportunity in the system. So yeah, so I think that's it for this video. In the next video, we're going to carry on and look at probably one of the most important things you're gonna need to know, and that's trends. And it's an exciting subject, and I hope to see you in the next video. Thanks for watching.